Welcome to the audio press release, APR, powered by IBN. This original production delivers market and sector insights, as well as executive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBN or one of the 75-plus investor-focused brands within IBN's dynamic brand portfolio. As multifaceted financial news and publishing company, IBN leverages its extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBN may have received compensation to produce this audio content. Please be sure to read IBN's entire disclaimers for full disclosures, as the information circulated in this audio press release is disseminated on behalf of LaFleur Minerals, may include paid advertisement. Now sit back, relax, and enjoy the audio press release, APR, featuring LaFleur Minerals. From exploration to production, mining's moment. Over the past year, gold, silver, and other precious metals have staged a consistent upmove that is reshaping the investment case for the mining sector. Driven by inflation pressures, global uncertainty, central bank buying, and tight supply, the precious metals complex today offers more than a safe haven hedge. It presents a credible growth opportunity. While equities remain volatile and many sectors face structural headwinds, mining companies tied to precious metals are emerging as both compelling and relatively stable investment options. Amid this backdrop, the timing of mining companies' transition from exploration to production becomes especially significant. It is precisely when a junior miner pivots into producer status, when it has defined assets, a processing route, and imminent cash flow, that the upside potential is often greatest, as earlier exploration uncertainty has been resolved and asset value starts to convert from potential into concrete economics. One company offering a striking example of this pivot is LaFleur Minerals Incorporated, LFLR on Canadian Securities Exchange and LFLRF on OTCQB. LaFleur holds a fully permitted and recently refurbished gold processing mill, is years ahead of many of its peer explorers who have yet to secure production assets, and presently trades at a discount to its asset value. By combining a near-term producer trajectory with undervalued assets, LaFleur is strengthening its position with others operating in the same mining space, including Nikola Mining, West Red Lake Gold Mines Limited, ES Gold Corporation, and Barrick Mining Corporation. LaFleur Minerals is actively advancing its pivot from explorer toward near-term gold producer status. LaFleur's flagship Swanson Gold Project is a high-quality advanced exploration asset with strong historical database and clear upside potential. A critical advantage for LaFleur is ownership of the fully permitted, recently refurbished Beacon Gold Mill. The company has laid out a clear and executable plan to restart the Beacon Mill. LaFleur has commenced the permitting process. Sustained momentum and mining's appeal. Gold and silver are riding one of the strongest rallies in recent memory, and the broader precious metals complex is showing durable strength. The precious metals are recognized by many investors, who have turned to both gold and silver because it may provide a hedge in potential economic or market downturn, as well as during sustained periods of rising inflation. In addition, platinum and other metals show similar upward trends, underlining how the precious metals family is broadly in favor. For investors, this rally reinforces the enduring appeal of the mining sector. Unlike many high-beta industry plays, gold and silver miners offer a hedge against inflation, currency depreciation, and macro volatility. As capital markets rethink exposures, mining companies tied to precious metals may be benefiting from scarcity, rising costs, and renewed investor interest as precious metals returned to have markedly outperformed the broader commodity space in 2025. Mining companies that hold operating or near operating assets, particularly in safe jurisdictions, are especially attractive. They can offer leverage to the underlying metal price while also offering tangible asset values such as a permitted mill or producing mine. That scenario is less speculative than pure exploration and more scalable than simply holding bullion. Within this context, LaFleur's business model, owning both a high-quality mill and mineral deposit in a prolific gold district becomes salient. LaFleur Minerals controls two critical production pillars: a fully permitted, refurbished gold mill and a mineral project within Canada's most prolific gold-producing region. The dual ownership and integration advantage is rare among juniors. As many peers remain stuck in permitting or exploration phases, LaFleur is positioned ahead of the curve. This progression into the production phase offers both the potential for upside and the relative stability of turning assets into economics. Near-term production pivot, PEA underway. LaFleur Minerals is actively advancing its pivot from explorer toward near-term gold producer status. The company is focusing on restarting the Beacon Gold Mill, a fully permitted processing facility, which will be fed by mineralized material from LaFleur's 100% owned Swanson Gold deposit in Quebec's Val-d'Or district. The company is eyeing a key milestone with the upcoming Preliminary Economic Assessment, or PEA, being prepared by ERM's Technical Mining Services Group. The PEA will cover mineral resources, mining plans, metallurgical testing, cost components, and other critical inputs required to validate production restart timelines and economics. Because LaFleur's mill has an operational history, last active in 2022, and the deposit is located an estimated 60 kilometers from the mill, many uncertainties that typically plague juniors are materially reduced here. The proximity of the feed source means trucking ore is feasible and economical, which enhances the confidence in cost modeling. The fact that the mill was recently upgraded, with approximately 20 million Canadian dollars invested, also supports more realistic cost assumptions in the PEA. Alongside recent ore sorting initiatives via the Saskatchewan Research Council to pre-concentrate material, the company is deploying modern operational enhancements that further de-risk the transition. By advancing the PEA now, the capital markets narrative shifts from exploration dream toward production plan, and that is when valuation re-rating often occurs. LaFleur's pivot toward production is meaningful because it bridges exploration and revenue by integrating a precise asset base and leveraging an existing mill. The coming few quarters are critical. The delivery of the PEA, followed by financing and mill restart, will mark the transformation in the story. Swanson Gold Project, Advanced Exploration Upside. LaFleur's flagship Swanson Gold Project is a high-quality advanced exploration asset with a strong historical database and clear upside potential. The project includes more than 36,000 meters of historic drilling and already boasts a current mineral resource estimate, or MRE, of 123.4 thousandths of ounces of gold indicated and 64.5 thousandths of ounces of gold inferred. The long-term ambition is to increase that toward 1 million ounces of gold, an objective supported by the abundance of gold-bearing structures, a large land package, and district-scale potential. Covering more than 18,300 hectares in the Val-d'Or Abitibi region, including 445 claims plus a mining lease, the Swanson project lies in one of the world's premier gold belts. LaFleur has publicly stated its intention to consolidate adjacent land packages, thereby creating a dominant exploration and production footprint. This land-scale ambition is rare at this stage and adds optionality beyond the base resource. Already underway is a 7,500-meter diamond drill program launched in July and targeting more than 50 prospects including Swanson, Bartek, Jolene, and Merrimack. Early results include high-grade intercepts such as 7.47 gram per ton of gold over 1.35 meters and 7.68 gram per ton of gold over 1 meter, as well as a standout 17.80 gram per ton of gold over 1 meter at the Bartek target. These results suggest both strike extension and new target styles beyond the current MRE envelope. As the drill program advances, 24 holes completed to date, 6 assays returned. LaFleur is refining its geological model, delineating high-grade zones and building the feed source narrative for the mill. Because the mill and logistics are already in place, the exploration upside at Swanson may translate quicker into value than a standalone deposit. In short, the Swanson Gold Project is exploration ready, scalable, and tied to a processing solution, creating a compelling story of growth through discovery. Beacon Gold Mill, near-term production engine. A critical advantage for LaFleur is the ownership of the fully permitted, recently refurbished Beacon Gold Mill, a 750 tons per day facility that was upgraded as recently as 2022 and is located in the Abitibi Greenstone Belt, one of the highest grade gold regions globally. LaFleur purchased this asset from a previous owner through a CCAA process in 2024. An independent review by Bumijim Incorporated confirmed that restarting the Beacon Mill would require approximately 5 million Canadian dollars versus the replacement cost of more than 71.5 million Canadian dollars and 3 to 4 years to build. The mill is royalty-free, unencumbered, backed by a 2.4 million Canadian dollars reclamation bond, and benefits from excellent infrastructure, including road access, grid power, and a skilled regional workforce. Because the mill is already permitted and physically upgraded, much of the typical build-out risk for juniors is eliminated. The ability of LaFleur to process its own mineralized feed from Swanson, along with the option to toll mill third-party ore, means the mill becomes a production engine, not just a cost line item. In essence, the mill flips the company's narrative from potential to capable production. From a valuation standpoint, owning a production-ready mill in a Tier 1 jurisdiction while peers are still exploring is a rare position. The capital efficiency of the restart plan further enhances the upside for investors. This integration sets LaFleur apart: a near-term actionable facility, a deposit with trucking distance, low restart cost, and clear path to cash flow. Many exploration companies lack one of these pillars. Others lack all. For potential investors, the mill ownership begins to align with the upside of production and the stability of operations. That duality is precisely what the most successful junior-to-producer stories exhibit. Mill restart plan and strategic capital execution. LaFleur has laid out a clear and executable plan to restart Beacon Mill with a budget of 5 to 6 million Canadian dollars, targeting Q4 2025 commencement of ramp-up and reaching full operation in early 2026. This allocation includes roughly 3.8 million Canadian dollars for equipment upgrades and approximately 1.8 million Canadian dollars for tailing storage facility or TSF repairs. This modest budget, relative to the value of the asset, speaks to strong capital efficiency. Positioned in the Abitibi Greenstone Belt, one of the most prolific gold regions globally and home to more than 100 historical and operating mines, LaFleur enjoys both scale optionality and third-party toll feed potential. The company is 5 years ahead of many regional peers that remain land-only or exploration-only entities. The transformation from explorer to near-term producer in a Tier 1 jurisdiction is the sort of evolution that often unlocks re-rating by the market. Capital markets interest is already building. LaFleur has engaged advisors, FMI Securities Incorporated in Canada and FM Global Markets Incorporated in the United States, for a proposed 5 million Canadian dollars secured debt financing aimed at the restart. The company also recently completed a fully subscribed, non-brokered private placement consisting of a 2.88 million Canadian dollar life offering. With a mill restart plan defined, feed source exploration advancing, and financing underway, the company checks many of the boxes that investors seek in a producer transition story. Bulk sampling, permitting, and production scalability. LaFleur has commenced the permitting process and is evaluating an approximately 100,000-ton bulk sample with an estimated average grade of 1.89 gram per ton of gold, representing approximately 6.350 ounces of gold and approximately 3% of the current resource estimate for Swanson. Processing this bulk sample at the Beacon Mill will both provide near-term production data and enhance the dataset feeding the PEA. With gold prices hovering around record highs, the economics of this bulk sample bear considerable significance. The permitting and closure plan work with Quebec regulators has started, and the company expects to convert the sample and permitting progress into tangible feed for the mill under the near-term production thesis. Because the region hosts more than 100 historical and operating mines, LaFleur benefits from nearby infrastructure, workforce, and supply chain, all factors that de-risk operations. With a mill in place and a defined sample program underway, the company is substantially ahead of many peers still reliant on distant processing and early-stage permits. The upswing in precious metals is real, and the mining sector has re-emerged as one of the most compelling investment categories. In that environment, companies that bridge the gap between exploration and production, and especially those that already control processing assets, offer unique opportunities. LaFleur Minerals encapsulates that profile. Deep exploration upside, an owned mill in a premium jurisdiction, and an imminent production pivot. The audio press release, APR, is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions. Utilizing proprietary corporate communication tools such as news aggregation and syndication, social communication, and brand awareness techniques, among others, IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. The owners, officers, and directors of IBN or financial analysts mentioned in this production do not hold any position in and do not intend to trade the securities in their own accounts. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the company thoroughly with a registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used and statements of fact have been obtained from featured companies and other sources, but not verified nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please read IBN's entire disclaimers and disclosures at www.ibn.fm/disclaimer. Thank you again for listening to the audio press release APR powered by IBN.